Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita, Khemka. Another green day for the market, but no big moves. 26,000 still remains elusive. And also the fact that today is the weekly expiry on the NSE, the Nifty weekly expiry, so to say, and some bit of volatility, we've seen in the last hour or so. But nevertheless, we are above that 25,950 mark. 25,989, that was the swing high for today. Yesterday, it was 25,972. So yes, slightly higher than yesterday's high, but 26,000 remains a hurdle on the upside. That's what we've seen today. But the mid-cap index continues to outperform, and there are quite a few high flyers in the mid-cap space today reacting to numbers and news flow as well. But in terms of sectors, quickly take you through what's doing well. PSU banks, of course, they've taken a breather after the recent rally. Autos, metals and IT, these are some of the sectors that are leading the way today. But pharma, FMCG, some of these sectors are out of favor. No big losses coming in on these indices. But nevertheless, they are trading with a bit of red on the screen. Capital market stocks are hogging the limelight today. After strong numbers from BSC, all of these stocks like Angel One are upbeat, even CDSL for that matter. We'll take stock of these stocks as we go along, along the show as well. But, another piece of news, the mutual fund data for January came through today, and equity inflows have seen a slight dip on a month-on-month basis. But that's not the story. Surprise, surprise, it's the gold ETF inflows that have trumped equity inflows. I don't know whether it's for the first time that's happened or it's happened for the first time in many, many years. Let's bring on board my colleague Surabhi Upadhyay to break down the numbers for us. Surabhi, strange times we are living in, stranger things playing out, right? Gold ETFs trumping equity inflows. I have never seen that.
Nandita, the data came out earlier than usual today. It was out by about
10:45,
10:30. I was taking my tea break after the morning opening show, right? And I thought, okay, we'll talk about large cap funds, mid cap funds. But then I said, wait, let's just check the gold and silver ETF data. And that just took everybody's breath away.
Yeah.
Gold ETFs in just 1 month, January, have pulled in over 24,000 crore rupees.
2x last time, right?
The inflow has doubled compared to about 11,000 crores that we saw in December.
Yeah.
I mean, it took a while for me to also digest that number because it was so massive and so huge. But picture abhi baki hai because this is just gold we're talking about. So the Association of Mutual Funds of India, AMFI, does not give out separate numbers on silver. Usually silver ETFs are clubbed in the category of other ETFs. But then our colleague Anisha was on the AMFI call to really try and break this down, and she picked up that silver ETFs got an inflow of over 9,400 crores in January. So 24,000 crores gold, 9,400 crores silver. If you combine this, then just gold and silver ETFs total have pulled in 33,000 crores. And that number is even bigger than the total equity inflow. The total equity inflow across all equity categories, mid cap, large cap, small cap, is about 24,000 odd crores for the month gone by. But gold and silver, my gosh, I mean, what price moves? What price moves and what inflows?
What inflows? You're living in such times. But let's break it down a little further. Do you think large caps have seen more inflows this time around, and mid caps and small caps have seen a drop in inflows, right?
That's right, that's right.
I mean, what's the sense? Comfort of large cap, that's what is finding favor with investors?
Throughout 2025, especially towards the second half, a lot of market experts, a lot of investment professionals kept saying that, look, markets are volatile, you're better off in large caps. Investors didn't really listen. Throughout the last many months, it was constant flows coming into mid caps and small caps. Both these categories, on an average, were picking in about 4,000, 5,000 crores every month. However, January is a departure from that trend because in January, large cap funds have seen an uptick, 27% uptick over December. The flows are about 2,000 crores. But small caps and mid caps, they have seen a decline over December. So those flows are ranging between 3,500 to about 4,000 crores. So if you're talking about absolute numbers, just the sheer amount of money, there's more money that's still gone in mid caps and large caps. But if you look at the trend, then there is a deceleration in mid flows December over January or January over December, and large caps have picked up. Now, whether this is a start of a new trend, we don't know. But also, January was a brutal month, right? Very rocky start to 26. So I think the diversification was very evident. People wanted to go to safety of large caps. People were definitely going in gold and silver. One more trend I want to talk about, the multi-asset allocation category, Nandita. Now, these funds, MAFs as they're called, over the last 1 odd year, they've been steadily picking up. They're gaining traction because they invest in fixed income, in equity, and in commodities, and they invest in gold and silver. So another reason why they're gaining in popularity. And this year, on the this month, January, for the MAF category, we've seen record inflows there as well. Over 10,000 crores going in multi-asset allocation funds. So again, if you pool in silver ETFs, gold ETFs, and the money that's coming in from the multi-asset funds into gold and silver, these are mind-numbing, mind-boggling inflow numbers in the precious metals category.
So that's what investors are paying heed to what professionals are saying: diversify, diversify, diversify.
Oh, that's the positive way of looking at it. The negative way, because I got concerned, the negative way of looking at it, and maybe you can ask Sunil, I think he's joining you on the show later, right? That at the end of the day, people are still chasing returns. They're chasing gold and silver ETFs after seeing, 60-70% price rise last year in gold, more than 100% price appreciation in silver, and they're still buying at these levels.
That's crazy.
Maybe high risk, high return strategy, I don't know. But yeah, some pretty mind-numbing stats out of the Amphi numbers today.
That's true, surprising. And as I said at the start, we're living in strange times, and that's really playing out, right? Thanks a lot, Surbhi, for taking us through the numbers and, of course, putting things into perspective. But on that note, waiting by patiently is Sunil Subramanian, Big Market Voice, joining in this afternoon. Sunil, great to have you on the show. Thanks a lot for joining in. We were just discussing the trends in the mutual fund data. You must have heard our conversation. What are your thoughts? Equities losing mojo, or people just chasing returns? How are you seeing this?
Well, first of all, I agree completely with please. Can you hear me? Hello, can you hear me?
I can hear you. Go on.
Yeah, okay. No, I completely agree with the way Surbhi's analyzed it. And to your question in terms of what is this? Investors chasing past returns? Absolutely. So it's nothing different. If you see when small and mid caps were doing well, they started putting more money there. When large caps over the last couple of months, if you saw flexi caps had picked up pace because they were moving to large cap, because 1 year returns of large caps were double digit, whereas mid cap was about 4-5 and small caps were negative. So I would say that investors all over the world, and India has nothing special, chase past returns. Second is gold and silver. It's not just the returns. It's all the news flow. You see, everywhere there are gold experts saying that gold is going to touch this number, silver will touch that number. So the news flow is also positive. Now, even when there was a correction recently with all the Mr. Wash's appointment and the crash, you still saw that people were out there, saying that silver is still a good bet. So I think that there are clearly what I would say geopolitical factors which are favoring these. So while a section of investors are probably chasing the past returns, there's another section which is actually taking a tactical call that geopolitical risk is here to stay, de-dollarization here to stay, and so precious metals are going to run up in the future too, and hence putting their money. So I think it's not fair to just say investors are just a herd mentality, just chasing past returns. I think they are smart also, and no, let me tell you this, no TV expert, no fund manager, nobody at the beginning of Jan 2025 got gold and silver right. So, so you can't blame them, right? So I'm just saying it's fair. And I'm saying, who is to argue they are wrong here? Because who knows, this year silver and gold could again see double-digit return because you're hearing what China is doing, right? They're telling their thing, pulling back the US Treasury investments, putting curbs on those. So I think that this is a mixture of some people who are smart in terms of diversifying into a contrarian asset class to equities, and some people who are obviously just chasing the past returns. So it's a combination. And within the equity also, Surbhi pointed out the fact that large caps are net positive this month. Well, yes, that's again a flight to safety. It's also another small category called focused funds, which also largely, it's only 30 stocks, and they largely put it in large caps. So that's also seen a big positive this month. And the third aspect, again, I don't know the Surbhi talked about this, is hybrids. Apart from multi-asset allocation, which have gained traction because of the gold silver, balance advantage funds and aggressive hybrids have also shown month-on-month growth. So month-on-month growth. Clearly, the volatility has created a certain amount of nervousness. There is a flight to safety. And ultimately, gold is the ultimate safe haven asset. So you can also look at gold and silver as saying it's a flight to safety, right? So, which is fair enough. I think that's the reality of the times.
Sure, it's a flight to safety. But after the recent, Sunil, it's a flight to safety, yes. And of course, you also pointed out the fact that geopolitical situation has been fairly volatile, and it's here to stay as of now. That's what it looks like. But after the kind of run up that we've seen in gold and silver prices and subsequently in ETFs as well, it hasn't really deterred investors, right? So here on, do you expect this trend to continue for a few more months?
Yes, I do. I think so. Because the commentary around gold and silver in the media is still positive. Okay. And I would say that this trend will continue. It may not sustain at such high levels, but it'll still be a huge positive. Just go back to 6 months ago. These were low single digit numbers, gold and silver. Right now, they are high double digit numbers. So, in terms of the crores collections, 1,000 crores. So, I'm just saying that yes, it will continue. Maybe next month may not repeat 24,000 crores, but even if it is 10,000 crores or 15,000 crores, it's still a healthy accretion. And I'll tell you where this is an issue. This is not an issue from an investor perspective. It's not an issue from a fund manager perspective because he's just going to buy. The issue is for the trade deficit of the country. Right? Because every silver and gold ETF has to buy a matching amount of physical gold and silver, and which we import. Almost entire gold and 80% of silver we import. So the trade deficit of the country is going to go up, and that's a larger thing on which, and that's where in the run-up to the budget, there was this huge rumor that government may increase the duties, right? And government didn't do, they bypassed. But I'm just saying the pressure on the country's current account deficit, right? This is going to also, pressure on the currency, for example, because you have to buy 40,000 crores because you had multi-asset funds also, which are 10,000 crores, and take 2,000 crores of that as gold and silver, right? 20% is the max they can. So then what are you adding? You're adding 24,000 of gold, 9,000 of silver, and another, 2 or 3,000. So 40,000 crores of import, the country has to pay for it in dollars. The deficit plus this. So I'm saying that, so I don't know how long the government is just going to keep quiet or bring in some controls on this, right? It's the numbers from the country's perspective, they do look. And the fact also is that it's also unproductive asset. See, I'm also reasonably bullish on the fact that gold and silver will deliver double-digit return this year, right? That's fine. As an asset allocation from an investor, it's fine. But for the country, the second aspect is such amount of import is going into an unproductive asset. It's not creating anything. Are you getting my point? It's just lying idle in the vaults.
Yeah.
So, I mean, I would say that's a larger issue.
That's
I'm
true.
not
Interesting
worried.
point.
But I'm saying these are the things in terms of, the currency is
That's
forward-looking. There's a pressure on the currency, right? So I think that's a factor that we need to keep in mind.
Right, those are of course some of the factors that one should keep in mind. But looking at the SIP flows as well, 31,000 crores, largely flat if you look at the last month's figure as well. Any thoughts on how SIP flows are expected to pan out here on?
No, I think they will see a gentle rise. This month was a particularly volatile month because there was a expectation of the budget in the run-up to the budget. And then you had the trade deal and all of that. So I think it's a fairly volatile month. So I think clearly people switched their attention to seeing how they could add more gold and silver. So in terms of an SIP amount, I guess the ring flat itself is a good signal. And I would say as normalcy returns and we have seen a good month, I think the markets post the deal have now been pretty strong. So next month, definitely I see this number creeping up. And I would say that by the end of the year, we should be touching closer to 40,000 crores. So I think that despite this degree of volatility, the SIP number remaining constant is a good signal. And in the future, it augurs well for a further rise in this number during the rest of the year.
Okay, of course, SIP figures. Yeah, the fact that it hasn't really decelerated, given the kind of volatility we have seen in the month of January, that's something to take heart from. But let's talk about, a lot of earnings reactions playing out in the market, right? Especially in terms of, what happened with SBI yesterday, 8% rally, the big elephant dancing, post numbers. We got the entire PSU bank index fired up as well. But what's your sense now? Of course, the fact that it had overtaken ICICI Bank in terms of market capitalization. But here on, do you see more upside coming through for PSU banks and leader of the pack? Should one stick to that?
Not necessarily. See, I'll tell you, I think, yes, PSU banks, yes, I still see. I know today there was a bit of correction in the PSU banks, but overall, I think medium term, with the whole trade deal coming through. And what is the trade deal focused on? If you look at it, trade deal is most around the MSME business, right? The MSME business is the export engine of the country, and it's the biggest employment generator. So MSME business needs financing. It's the public sector banks who are out there who have a 3-4 decades experience of lending to that segment. The private sector banks, I think, will be still they'll still cherry pick and choose good quality MSMEs who have good collateral, good track record and all that. But PSU banks know this segment far better. So I think any growth in that, and there's also good news around private capex picking up. If you saw some data coming through, there is private capex has started ticking up again. So there again, the suppliers of the capex expansion are all from the mid and small cap or MSME and SME. And that's where I think PSU banks will be in a very strong wicket in terms of lending to them. And those interest rates that they lend to are also good double-digit interest rates. So NIMs should also grow. So I'm pretty much been a bull on PSU banks for quite some time. I think with both the trade deal and the budgetary whatever support to the economy that's coming through, I think PSU banks will be major beneficiaries. And the reason I don't want to cherry pick and say, do we stick with the larger ones, is because I see there's a committee being formed in the budget. It was announced, right, for banking. I think that's really going to come out and say we need to merge. We need to have 4 to 5 large public sector banks to compete, to raise money internationally at softer rates, to raise long-term capital. Because you no longer have an ICICI Limited, right? The old project finance company is no longer there, those things. So I think that PSU banks, when the merger happens, the small and the big will get merged. So who knows, the upside in the small may be better because they're getting merged with the bigger bank. So I would say don't try to pick. I think public sector banks as a whole have very good corporate governance because unlike the private sector, they're all government owned. They are run pretty well. Efficiencies can be improved, which is what the mergers will achieve. So I would say there's no need to pick. You can build a portfolio with an entirely PSU bank pack, right? And that will do well. And the mergers would only make smaller banks bigger, slightly weaker banks stronger. So overall, I would say just place your bet because you know which bank is going to get merged with which we don't know, right? So I would say buy the pack.
Okay, by the pack, that's the word. And of course, that committee that's being formed on PSU banks, of course, that could pave the way, or that could, take stock of mergers happening between smaller banks to make, big, strong bank out of them. But last question really, we've had the US-Bangladesh trade deal come through. That would cut, the tariffs on Bangladesh by 1%, and for certain, goods, that tariff will be 0. How would you look at this for some of these, Indian textile, chemical players, export-oriented players? Because that could be a dampener, and that's playing out in today's session as well. We are seeing some of these names like Gokul Das under pressure as a result of this. Higher competition concerns, and what do you do with these stocks now, especially after the Bangladesh deal?
Yeah, I think it's a knee-jerk reaction. Because I did look at the slighter and the finer points. So it's only when they use US-based viscose and yarn in their production that they get the 0 duty.
Yeah.
So I think about 70% is the US-based content. Then what are their margins going to be? Because US is going to sell to them and then buy it back, right? So I don't think that is really a concern because India can enter into a similar deal with US and we'll get the same terms. So I would say that I think competition-wise, going by saying I'm 1% cheaper than this country, that country is not the basis. It's about the volume of business, it's the quality of the business that you tie up with. You tie up with the Gap, Banana Republic, Walmart, or who for your outbound thing, how much you can give volumes, the scale, and all of that. Bangladesh is a big player in the textile space. There's no doubt their companies have scale, and they've always a competitor. Now, because they went from 20 to 19, I don't think that's really, it's a knee-jerk reaction by the market because of the highlight, and a lot of retail traders must be out and selling this. But I don't think the story fundamentally changes. Second, mind you, the rupee has weakened. More than I think the Bangladeshi rupiah. So to the Bangladeshi, whatever, taka, right? So to that extent, we also have an attack of the depreciation. So I'm saying these are short-term concerns. The real thing is the scale. And I think Indian companies will need to scale further. I see a lot of, I would say, M&A activity happening now post this thing. And these textile companies should grow bigger because they'll buy out the smaller ones. And there'll be a lot more formalization happening. So I would say that I'm still bullish on the overall textile chemical space post the trade deal. So no issues at all. These minor corrections will keep happening based on what other countries. But none of that is on that basis. We had a healthy market share before these tariffs came into place, and we will continue to have a healthy market share after this, because end of the day, 1% is not going to make a difference to that playing field, right? As long as we stick to quality and scale, the economies of scale are important, because obviously American companies, when they buy, they are the biggies. They will drive your margins down very fine, and you can only make it up through scale. So I think that's an important. So I would say players who are having the cash flow and the balance to scale up, buy up a lot more small units and scale up would be the ones who would do much better.
All right, that's the view on some of these export-oriented names. 1%, no cause for concern. It's a knee-jerk reaction, really, and the view on some of these sectors like textile, chemicals remains on the positive side. With that, Sunil, thank you for joining in and sharing your thoughts. Always great to have you on the show and getting your insights. They are sharp, they are good, and they're very explanatory for our audience, and that's something that sets you apart as well. Thanks a lot for joining in, Sunil.
Thanks a lot. Thanks a lot.
Well, that was Sunil Subramanian with his thoughts on the market, on Amphi data and a lot of other sectors. But on that note, let's also bring on board Osho Krishan, who's the Senior Analyst, Technical and Derivative Research at Angel One. He joins us now. Osho, hi, welcome to the show. Steady drift today. It's Nifty FNO expiry as well, weekly expiry, but no big volatile moves as such. It's been a steady drift on the upside, although we've cooled off from the day's high. We've held on to the 25,900 mark quite smartly. But 26,000 remains a hurdle, right? Because we came very close to that level today as well, but we couldn't really climb past that. What's your sense? How are things looking?
Very good afternoon, Nandita. Firstly, thank you for having me at the show. Well, yes, no doubt we have seen a decent movement in the last 2 or 3 trading sessions, but from there onwards, on the higher end, there is some kind of a rejection that we are witnessing around 26,000. But overall, even it was expected that in today's trading session, because there has been positive developments in the last 2 sessions and today being the weekly expiry, it was expected that some longs will be curtailed at intraday high. So I'm expecting for short-term perspective, still the biasness remains on the positive front. But as you mentioned, 26,000 remains the key hurdle. And one should wait for a decisive breakthrough and a sustained move beyond 26,000. Till that time, better to have an approach of buy on the dips, because 25,800, 750 on the lower end still has a very strong support levels. And looking at the overall market across the board participation, I expect that many of the counters and thematic movers shall be providing a strong opportunity for Indian equities. But for Nifty and Bank Nifty, they are still at a kind of a indecisive zone, and one should try to lighten their positions in the benchmark index until we see a very strong decisive upsurge beyond the zone of 26,000.
Okay, that's the view. But very quickly, just 2-3 minutes left for the day to end. Any trades for our viewers? Any BTSC strategies?
2 counters are looking very positive. First one is Gabriel India. Gabriel India has seen a very positive traction in today's trading session, is almost 3% higher. And I'm expecting that with the kind of development this counter have seen, there is still potential on the higher end. So one can look for buying opportunity in Gabriel India. 1,035 to 1,040 will be the BTST target for this counter, while it will be advisable to trail the stop losses around the zone of 969. The other counter which is looking positive from a positional 1 to 2 days perspective is Nestle India. Nestle India is also looking very positive. One can look for buying opportunity at current levels. 1370, 1380 will be the positional target, and 1275 is advisable stop loss for Nestle India.
Nestle and Gabriel India, 2 BTSC strategies coming in from Osho. But Osho, just about 20 seconds to left for the markets to shut shop. Really, we'll take stock of that. But any thoughts on the likes of Eternal, Swiggy? Both of them hit multi-month highs today. I don't know if this is a trigger, but Zomato has launched a dedicated AI-powered hotline to simplify the onboarding process for delivery partners. It's being reported across media. We'll talk about these stocks in just a bit, but let's take stock of how we've shut shop for the day. The Nifty has shut shop above that 25,900 mark. So that's a good thing, given the fact that it was Nifty weekly expiry as well. We didn't really see that last hour hiccup that we usually see, but still we've ended way off the day's high, 70-80 points below the day's high. The day's high was somewhere around 25,989 or thereabouts. But the mid-cap index continues to outperform, 0.5% uptick on the Nifty mid-cap index. Breadth of the market is also fairly strong, 3:2. That's the NSE advance decline ratio today, and it was strong throughout the session as well. 1829 advances to 1160 declines. On the sectoral front, you had both Nifty Bank and Nifty PSU Bank indices taking a breather, which is why I think it was difficult for the Nifty to get past that 26,000 mark, because the Nifty Bank index wasn't really firing up. But what did well were the likes of autos, metals, real estate, IT, FMCG as well. I think it came back into the green, marginally so, but nevertheless FMCG as well managed to end the day in the green. A lot of FMCG earnings will be awaited. Consumption names, so to say, Titan, Britannia, even HUL will be reporting later this week. So FMCG index in particular will be in focus. What didn't do well aside of the banking twins was in fact the Nifty Pharma index that ended the day in the red, 0.5% down on the Nifty Pharma index. Take stock of some of the individual names then. Eternal multi-month highs, as I was just talking to Osho about it, and we'll discuss the chart in just a bit. 5% up on shares of Eternal, that was the top Nifty gainer. Tata Steel, after good numbers, yesterday it was up somewhere around 3%, today another 3% added, so 6% move in a matter of 2 days. ONGC up 2%, even auto names like Bajaj Auto, M&M, they gained anywhere between 1.5% to 2%. Some Eicher Motors, that will be reporting numbers today, ahead of numbers, that was up 1.5%. L&T, some kind of an order win, that stock was up and about. Axis Bank, although Nifty Bank index in the red, Axis Bank managed to buck that trend. On the flip side, although IT was in the green today, HCL Tech has emerged as the top Nifty loser today, 2% down. Some of these NBFCs were also under pressure today, the likes of Bajaj Finance, Shriram Finance, both of them on the losers list. Dr. Reddy's pulling Nifty Pharma down, Bharti Airtel. Asian Paints also in the red, and so were the likes of HDFC Bank, ITC, SBI Life and Reliance Industries as well. But before we talk about Eternal, Swiggy and a lot of other names, I want to just see which were the top movers and shakers when it comes to the broader end of the markets. On the Nifty 500, Praj Industries was a big winner. That stock was up 15.5%. Sun TV, 8% uptick. It reported numbers recently over the weekend. The stock is up and about. JM Financial, Swiggy, Amber Enterprises post numbers, upbeat 6.5%. Tata Communications and BSC, of course, that's post earnings, it hit a record high. In fact, it has got the entire capital market lot excited in trade. On the flip side, all these pharma names like Aurobindo Pharma, under pressure, 6.5% down reported numbers. Some of these textile names like Welspun and other KPR mills, etc., they were under pressure. Of course, Sunil pointed out it's a knee-jerk reaction, and the outlook remains positive on these stocks. So watch out for them. E-Clerks, Naveen Fluorine, by the way, saw a very, very smart uptick, but it succumbed to profit taking. Numbers were good, and the brokerages have maintained their faith in the stock as well. But it did succumb to profit taking around midday and ended the day down by 4% or so. Lots of other movers, but these were some of the notable ones. But we were talking about the likes of Eternal and Swiggy. Is there a renewed up move that you see in these stocks in the coming days, especially after today's move?
Comparatively between Eternal and Swiggy, I am more bullish or for a pullback in Swiggy, because for Eternal we have already seen a kind of a consolidation around the zone of 290 to 300. Today's trading session, yes, it has given a very strong price volume movement, but overall it is having a very strong resistance around the zone of 312. So until it witnessed a strong sustainable move beyond 312, the upside remains on the cap side. So Swiggy, on the other hand, is looking very positive. It has given a very strong bullish reversal kind of a pattern from the support zone, which is near to the zone of 305, 310, and it is a historical support levels. So I'm expecting from here onwards Swiggy can see a decent movement towards the zone of 380 to 390. So comparing both the counters, Swiggy looks more promising on the technical chart, and I'm expecting that in the short-term period, it might test the zone of 390. And again, we need to review that whether the momentum will still persist in Swiggy or one should try to book their profits.
Okay, more constructive on Swiggy if you compare the two of them, Swiggy and Eternal. But let's talk about BSE as well. You know, the entire capital market lot was excited today. Of course, you won't be commenting on Angel One, but BSE, CDSL, all these stocks were upbeat for BSE in particular. Some of the brokerages have outlined a target of 3,650 and upwards. For the medium term, what are the levels one should watch out for?
See, overall, there has been a very strong breakout in BSE today. There, the counter was already 6.5% higher, and that was backed by strong volumes. So technically, it is looking very strong, and I'm expecting that from the kind of a setup or the breakout that it has given, near about 4 to 500 points of upward rally is expected. So the expected target will be somewhere around the zone of 34 to 3,500 based on technical momentum in this counter. So I'm expecting once the counter is into a bullish bias, there might be some kind of profit booking because the counter have already seen a decent traction from the zone of 2650 in the last 2 weeks. So if there will be any kind of correction or any kind of profit booking, one can look for buying opportunity in the counter around the zone of 3050 to 3080 odd levels. And on the higher end, 3400 followed by 3500 is the short-term target that one can expect in this counter.
Okay, that's about BSE. But moving on to pharma, that's one index that was out of favor. You had the likes of Dr. Reddy's under pressure, Aurobindo Pharma as well, a top laggard on the Nifty 500 index. Any of these names that you would look at, what should the strategy be?
See, firstly, for Dr. Reddy, the overall technical setup remains on the positive front. No doubt the counter have seen a kind of bearish engulfing in today's trading session, and there might be further corrective phase also in the short-term perspective. But I'm expecting till the time it is holding the zone of 1210, 1220, one should not be very much pessimistic in the counter. While on the higher end, I'm expecting it has turned from a resistance levels of 1280. So that remains a strong hurdle for the counter. And any breakthrough above 1280 can trigger positive momentum. So for now, 1220 to 1280 is the trading zone. Try to accumulate on the lower end and try to lighten positions on the higher end. Now for Oro Pharma, the counter was trying to have a kind of a comeback, but with today's fall, the counter has again tested the short-term support level. So I'm expecting one should wait for another day. A follow-up sell-off can trigger further correction towards 1020, 1030 odd levels. If that does not happen, it is at a very critical support levels. So one may even look for buying opportunity at these levels, but better to wait for one more follow-up session. If it happens, then take decision on either side.
Okay, that's about the pharma pack. But talk about Navin Fluorine as well. A very sharp uptick we saw, at open, and then it kind of held on to it for the first half. But then the stock succumbed to selling pressure. Do you see this continuing, the selling pressure, or was that just about a profit taking? Because the stock has rallied in excess of 50% in the last 1 year.
See, overall, the counter has already seen a very strong momentum. It has been into a cycle of higher highs, higher lows. Recently, in the last week, we have seen a consolidation and runaway breakthrough in this counter. So overall, the technical parameters remains on the positive front. Until the time it is holding the zone of 5900, there is no sign of caution. But yes, with today's strong bearish setup on the higher end, I'm expecting that 6600 should be a major hurdle for the counter in the short-term period. So one should try to accumulate the counter on the dips of 5900 with a target price of 6600 from short-term point of view. And if there will be any sustained move beyond the zone of 6600, then again it will return to the cycle of higher highs, higher lows pattern, and one should stay invested from medium to long-term perspective.
Okay, that's that's the perspective there. But let's shift focus to more movers and shakers. Bata, that's one stock that had spring in its step today. Numbers were good and the stock up somewhere around 4% or so. The last 1 month has been quite flattish, and the stock has seen quite a bit of a sell-off. If you look at the last 6 months or so, with 20-25% kind of a cut or so. After the kind of move that we've seen today, recently we've seen some bit of buying interest coming in. Do you see that interest coming back for the stock, Bata? How does it really stack up within the consumption basket?
See, overall, it will be very early to say that this is the bullish reversal or not. But overall, looking at the technical parameters, the counter has given a highlight of reversal from the oversold terrain. So I'm expecting that from here onwards, the probability of moving higher is much way higher as compared to a stagnation zone for the counter. So one may look for buying opportunity on the higher end. 1000 and 1040 is the potential target that I'm expecting Bata to retest in the short-term period as a pullback rally for the counter, while on the lower end, as it has given a very strong reversal from the strong support of 850, so that should be kept as a strict stop loss for any of the new trade that is going to take place from here onwards. But for short-term traders, I'm expecting the pullback to be seen from a short-term point of view. So one can look for buying opportunity. 1000 will be the first target, followed by 1040 rupees.
Okay, that's about Bata. But what I'm getting your thoughts on some of these metal names as well, the likes of Tata Steel. Of course, metals, have been shining bright, so to say, and post numbers. Tata Steel has also clocked in just about a 6% rally in the last 2 days itself. Would you look at some of these names like Tata Steel, SAIL, JSW Steel, especially the ferrous ones? Would you look at chasing some of them right now?
See, overall, the whole metal space is looking very lucrative from past 2 months, and they have already been into the overbought terrain, but still there is a strong potential movement in these counters. So one should try to hold the momentum. If someone wants to buy at present levels, then even though those people can start accumulating at current levels also, but with strict stop loss, because the counter has already been into overheated parameters. So from here onwards, there might be any time from there which the counter can see some kind of profit booking. For Tata Steel, I am expecting that with the kind of breakout the counter has given, 212 will be the first and very immediate target. But if it breaches the zone above 212, then 226 to 230 will be the next potential target for this counter. So one can look for buying opportunity. And for those who already hold a position, it will be advisable to trail profit, keeping a stop loss of 195. Now for JSW Steel, the view remains on the positive front as the counter is still into momentum, and it will be advisable to hold or ride the momentum in these counters. So for JSW Steel, I am expecting that it should remain positive above the zone of 1200. So 1200 should be the trailing stop loss in the counter, and one should try to hold the counter till the momentum persists in overall metal space.
Okay, that's about some of these metal names, the likes of Tata Steel, JSW Steel. Keep those on your radar. But talk about Amber Enterprises as well. Stock is of course upbeat post numbers, but if you look at the performance of the stock so far this year, which is 1.5 months almost, although January was a fairly rocky month for equities, for indices, so to say, we've seen Amber Enterprises clocking in a 16% rally for the year so far. Do you see higher levels here on, or do you see do you expect there to be some kind of a speed breaker going forward? How are you looking at the Amber Enterprises up move, and should one chase this stock here onwards?
The pullback in this counter is very vertical in nature. In specifically last 3 days, the counter has surged from the zone of 6250 towards 7500 odd level. So there has been a very strong momentum in this counter. No doubt I am expecting that there might be a strong V-shaped recovery, but looking at the vertical rally in the recent period, one should maintain strict stop loss because some kind of profit booking might take place in the short-term period. On the higher end, 7640, 7650 is a kind of a strong resistance. So until it breaches the zone of 7650, one should not be very much conservative with the movement this counter has been into, especially in the last three trading sessions. And it will be advisable to trail stop loss at present. 7000, 7050 will be the advisable stop loss for the counter, and one should not take fresh position at present. Better to wait for a sustainability above the zone of 7650 and then can look for buying opportunity in Amber Enterprises.
Okay, that's the view, and 7,000, 7,070 should be a good support level here. But yes, as you mentioned, right from 27th January till now, the stock has rallied 36%. That's the kind of vertical recovery in stock prices that we have seen when it comes to Amber Enterprises. But along with banks, NBFCs took a breather today. The likes of Shriram Finance, Bajaj Finance, saw some bit of profit taking. But if you compare the charts of a Shriram Finance and Bajaj Finance, of course, Shriram has outperformed. Which one would you look at if given a choice between the two?
Looking at the chart formation and the overall risk reward from both the counters, obviously it will be Bajaj Finance, which is looking way more healthier as compared to risk reward ratio. But as per the momentum perspective, Shriram Finance is still looking positive. The only negative development or a cautious development in this counter is that there is negative divergence. So one should wait for the counter to hold the zone of 1000. So if it sustains above the zone of 1000, there is no sign of caution. But if there will be any kind of fall beyond the zone of 1000 on the lower end, then one may look for exiting opportunity in Shriram Finance. Whereas on the other hand, Bajaj Finance is looking very positive. It is at a very strong support levels of 200-day exponential moving average. And from a longer term duration, I'm expecting that this counter can retest the zone of 1060 followed by 1080 from medium to long term perspective. So this is looking positive to me and present. 920 is a very strong support level. So with 920 as a stop loss, one can look for buying opportunity in Bajaj Finance.
Okay, Bajaj Finance with 920 as the stop loss, and of course in terms of risk reward ratio, it's looking much healthier compared to a Shriram Finance. That's the call on NBFCs. Well, there were quite a few high flyers today on the back of good results, like Lumax Auto is the other one that I want to draw your attention to. The stock hit an upper circuit of 20% post the numbers. How would you trade into some of these counters?
For Lumax, I expect that this counter is looking positive to me overall. There has Lumax Industries you are talking about, correct?
That's true. Lumax Industries, yeah. I beg your pardon.
Yes, the Lumax Industry is looking positive to me. There has been a decent momentum. The counter has seen a strong momentum in today's trading session, but overall the development has been robust. The counter has been on a formation of higher highs. Recently, the counter was on the verge of giving a breakdown, but again, with today's momentum, again the counter has entered the cycle of higher highs. So I expect the momentum to continue on the higher end. 5700 should be the trailing stop loss in the counter. And if someone wants to take new position, it will be advisable to wait for some pull off in the counter towards the zone of 5700 and then can look for buying opportunity. On the higher end, again 6200 being the first target that I am expecting in the counter, but once it surpasses the zone of 6200, then again 6450 to 6500 will be the next potential target that one can expect in this counter.
Okay, that was Lumax Industries for you. The stock was locked in upper circuit today, 20%, although Lumax Auto was also up somewhere around 5.5% or so. But another name that I want to draw your attention to is PB Fintech. It has had a very volatile last few weeks, right? Today as well, it was among the top mid-cap losers, down 1.5% or so. The Nifty mid-cap index, mid-cap 100 index at one point in time, it was the top loser. But how does one navigate this volatility? Is there any trend visible at all, or do you expect the counter to remain volatile? And should one look at strict stop losses while trading into this counter?
On technical fronts, the counter is still looking very weak because it is having a kind of a strong rejection around the 20-day exponential moving average and is still hovering below the short-term moving average. So I'm expecting until it gives a decisive move beyond the zone of 1600 as of now, which is the 20-day EMA. So until that time, better to stay sidelines from the counter. If there will be any kind of positive traction above the zone of 1600, then one can look for buying opportunity, but maintaining strict stop loss of nearly 1480 to 1500 from a short-term perspective. Although I'm expecting with the kind of oversold parameters, there might be a strong pullback that can be seen in the coming period, but better to wait for some kind of a conclusive movement and then only look for buying opportunity in this country.
Okay, that's the view on PB Fintech. I want to talk about railway stocks as well, particularly Railtel. That stock was buzzing on the back of a 455 crore rupee order, but railways, one theme that experts are not really very enthused about. Barring move here or there on the back of order wins, hasn't really been able to get back on track. Right, they've just been chugging along. But anything, does anything excite you within the railway basket at all?
See, overall, I was expecting railway counter to move before the budget, but there has been no traction and there was no certain movement even after the budget allocation. But overall, there has been a very strong time-wise correction phase in the whole railway space. So I'm not very much bullish in these counters, but overall, these consolidation can be seen as an opportunity to invest from longer-term duration, because there has been very strong stagnation or time-wise correction zone in these space, and once there will be momentum back in these counters, then we can see decisive upsurge also. So for Railtel, yes, today it was on the higher end. It has gained approximately 4.5% on closing basis, but technically I will be more bullish once it surpasses the zone of 365. Then only technical parameters can see some kind of sloping trend line breakout. Till that time, there might be some kind of traction based on news, but 365 will be the main resistance zone above which only one should become very much bullish in the country.
Okay, that's about Railtel, and of course some of these railway stocks haven't really been able to gain traction. But for tomorrow in particular, what would the trade really be? Would it be a Nifty or would you prefer the Nifty Bank Index? Where is the setup looking much more exciting right now?
Overall, I am not very much strong, having a very much strong movement expectation with both the key indices, but I am expecting that thematic movers will be having more focus. Mid cap and small cap indices can see some kind of outperformance in these markets. For Nifty, again, 26,000 remains a very strong resistance zone. So until we see a decisive move beyond 26,000, till that time, better to wait for dips to accumulate position, because today also we have seen a strong rejection from the higher end. So if there will be any kind of dip towards 800 to 750, that should be seen as a buying opportunity in Nifty. For banking index, it is looking positive, although on the higher end, because of profit booking in majority of some of the counters from PSU banks, the bank Nifty has not done very significantly and it was into a subdued momentum. So I will wait for another 1 to 2 trading sessions in bank Nifty. If there will be any kind of conclusive movement on the higher end, then 60,800 is the spot levels where we can see some kind of positive traction coming back in bank Nifty. So for Nifty, I'm having an approach of buy on the dips, while for bank Nifty, better to wait for a breakout and then look for buying opportunity.
Okay, wait for a breakout on the Nifty Bank Index before looking for buying opportunities. 60,800 on the upside, that would be a level to watch out for. But last question really, Osho, we've seen some of these export related themes like textiles, chemicals see some kind of pressure today, especially after the US Bangladesh trade deal. But we've seen a fair bit of recovery, in some of these names like Welspun, even for the likes of Pearl Global, KPR Mills, all these export related names. Would they still be buy on dips candidate? And do you think if the stocks see some more pressure in the coming days, that would be a good opportunity to jump in?
Definitely. See, in the last week, the counter have seen a very strong gap up running, and majority of the players must have missed the bus because of the kind of breakout or the kind of a runaway gap that we have seen in these counters. But with time, there might be a possibility of retesting or fulfilling the bullish gap on the lower end, and that will provide opportunity to re-enter into these counters. For now, I am expecting that the further correction can be seen in majority of the counters, but once it fulfills the a bullish gap on the lower end, then one can look for buying opportunity in majority of the counters. For KPR mills, it is at a very strong zone as of now, but any dip towards the zone of 890 to 900 will be providing good opportunity to accumulate from short to medium term perspective.
Okay, that's about some of these export oriented names, textiles, etc. But any thoughts on Ramco Cements? Osho, numbers came through and the stock, of course, ended the day in the red. Numbers weren't really enthusing, and CLSA has also downgraded the counter. The stock was reacting to that. Within the cement pack, anything that's worth a look?
For Ramco Cement, it was at a very strong resistance level. The zone of 1200 is still a very strong resistance level. Although it was expected that from here onwards there can be a breakout that can be seen in the counter, but the kind of fall that we have seen in today's trading session, there might be a possibility of further cool off towards the zone of 1100 to 1080 odd levels, and that should be seen as buying opportunity with target price of again 1200. And once we witness a breakthrough above 1200, then only one should become very much aggressive with bullish biasness and can look for higher targets of nearly 1380 to 1400 from medium term point of view.
Okay, that's about the cement pack and Ramco Cement in particular that of course Osho was talking about. Osho, with that I would like to thank you for taking out time and joining in. Always a pleasure. Look forward to more interactions. You have a great evening and I'll see you soon. Thanks a lot for joining in.
Thank you so much.
Well, with that, we've come to the close of this edition of Closing Bell. But I just want to point out some important data points to watch out for from the US market today. US retail sales data is awaited. Later on, we'll have the jobs data also coming in, and we'll have the US CPI data also coming in. So, data heavy week when it comes to US markets. Yesterday, of course, we had the Dow hitting a fresh record, S&P clocking in back-to-back winning sessions. So globally things are looking fairly okay, fairly good rather, because Asian markets are also upbeat. Nikkei has been extending the the record run after Sunil Takeichi's victory, landslide victory, and that continues to play out in Asian markets, because even the Korean markets, South Korean markets, KOSPI hit a record high, almost hit a record high today. That was up somewhere around 4%. And rest of the Asian markets were also doing fairly well. And even right now, you look at the European markets, they are mixed, but nothing really to worry about. So global cues are looking fairly strong. We've also done fairly well. It was another green day for us as well. But on the upside, 26,000 remains a key hurdle. Let's see whether we manage to get past that level tomorrow or not. Today we came very close to that level, but couldn't really manage to get past that. Today, of course, we had the Nifty FNO expiry as well, the weekly expiry. So there was a fair bit of volatility at play. But tomorrow is another day. Let's hope that we could clock in that 26,000 mark, finally. With that hope, we'll call it a day here on Closing Bell. But stay tuned to Moneycontrol for all your other news and updates. We'll see you with the markets tomorrow morning at 8:30 a.m. Thanks a lot for watching.